Hi everyone, it's Bagger. It is Tuesday, November 2nd at about 12:41. This time tomorrow, the markets are going to be roiled. They're going to be going up, they're going to be going down, maybe back up, and maybe back down again. Why? It's Federal Reserve Day. It's Fed Day. And we're not going to speculate on what the Fed is going to say or do, which is they're going to probably do nothing. They will have something to say. And we're not going to entertain or play in that space as far as, trying to mind read them. They probably don't even know what they're going to say at this point. But it's safe to say that the markets will be roiled. When you have a day where the markets are going to be flying up and down because of a Fed announcement or some Fed words or an unemployment number or maybe an election or two, something that is going to be jostling the markets, it can be very difficult to get on an intraday trend, even a 5-minute or 15-minute, because the market is so volatile. In that instance, running a point and figure chart similar to what we have here on the ES, which by the way has our SMC point and figure trend text, SMC point and figure posture text, and the SMC brick value, so every brick is $100, and in particular the strategy point and figure chipper. If you've never run it, tomorrow might be a good day to practice running it. And what I would suggest those that have this program as an annual member, pull it out of the library, load it into one of the indices, ideally maybe the ES. This is set at 2 points. You could set it at 3. You could experiment. Again, do it in simulation if you've never done it before. Make sure you're in the real contract. Turn on the point and figure chipper. I would play it long, I would play it short, and I would turn it on without confirmation. Without confirmation in a simulated environment, please. Simulation if you've never worked with it. And let it run. Let it run and see what you see, especially toward the middle part of the day into the afternoon. Also, our experience has been you can have your positions up here in your position window that you can in fact scalp it. So if it's up, several $100s and you want to scalp that money, you can go up, close that money, or have your trade button in the corner, and then when it comes back down the other side as it's jostling, it will fire short and you can continue to scalp. The name of the game with the point and figure chipper is to get it plugged into a market that is going to be pretty volatile, which right now it's pretty stymied. Get it on, get it automated, get it in there without automation, or without confirmation, not automation, without confirmation, and try to scalp it as best you can, and try to end it as quickly as you can. So maybe it's something you run for an hour or two during a volatile session and then just turn it off. Again, practice with it. If you've never done this, please don't load it in with real money and do it without confirmation and get hurt. Like every program, every strategy, every chart, these things have to be practiced. And so I thought I would just get a word out to everybody. Tomorrow would be a great day to practice with the point and figure chipper. Let me know what you see, what you experience. It does have a profit target. It does have a stop loss. I would not worry about the stop loss. It will reverse itself. The maximum loss here would be a $3 reversal, which means the maximum loss on each trade here with this setting would be $300. If that's too rich, you could try to make the bricks a little bit smaller and or scale down with micros. I would not try to trade a fast-moving market or point-and-figure chipper with confirmation, or try to trade this merely from one side to the other with discretionary trading, that is, pushing a button in and out. That would not be a good idea. Good luck. And on the bigger picture, on the macro picture, while we have everyone's ear, if I had to speculate, I would think that the Fed is going to be verbally more hawkish than dovish. And with the markets where they are, we see a significant correction looming. Seasonally, we're in kind of a sweet spot. Everyone gets the Thanksgiving thing going on and the Christmas, but markets have been known to turn down on Thanksgiving. Usually it doesn't, but we have seen some really nasty Fridays after Thanksgiving, which the futures markets will be, at least in the past, they have been open. So we are most definitely up at all-time highs on the S&P, all-time highs on the NASDAQ, all-time highs on the Dow. The Russell is trying to get up there, pushing up into it. The VIX is at lows, but not at all-time lows, which gives us a little bit of pause and a little bit of that divergence. And we really think at this point, over the next few months and going into next year, that these markets are going to be looking at a very significant correction. Of course, we're going to follow our machinery, our robots, and do what we do on an intraday basis or on a swing basis or even longer term. But our decisions will be mechanical, not fundamental. We follow the money flow. Good luck, everybody, and have a fun day tomorrow. It's going to be a hoot.